Most people think investing is only for rich people, but here's the truth. Even just $5 a day can slowly turn into real financial freedom. No tricks, no big salary, just consistency. In this video, I'm giving you a 60-day update on my $5 a day investing experiment journey, and even if you missed the 30-day video, don't worry because I'll catch you up and show you exactly what I've learned so far. In this video, we'll cover what I'm investing in, why $5 a day, how it works and how much my investment can grow over time, and go over one of the simplest investing strategies you can start today, even as a complete beginner. Before we dive in, if you're new here, hi, my name is Paul and I talk all things investing, money, and building wealth. And if that sounds good to you, make sure you smash that like button as it helps me out so much at no cost to you. So why $5 a day? Well, when I started this experiment, the goal wasn't to see if investing works. We already know that it does. The real question was this: what happens when you apply professional investing principles to an amount small enough that anyone can replicate it? I chose $5 a day very deliberately, not because it's all I could afford, but because it's the point where discipline beats motivation. In my experience, most people don't struggle with investing because they lack knowledge. They struggle because they're inconsistent and they invest when the market feels good and disappear when it doesn't. So this was a controlled test. Same amount, same assets, every single market day with no emotions involved. $5 is small enough to ignore the noise, but meaningful enough to build a repeatable system. And once you build the system, the dollar amount becomes irrelevant. Because the exact same habit that works at $5 a day is the one that works at $50 or $500. That's why this challenge isn't really about the money. It's about proving that long-term wealth is built through process, not intensity, and about building the habit that separates people who think about investing from people who actually build wealth. So once the rules of the experiment were set, the next decision was obvious. Choose an investment that rewards consistency over speculation. That's why I chose VOO, or Vanguard's S&P 500 ETF. Here's why VOO is so great. Number one, it tracks the 500 biggest US companies like Apple, Microsoft, Amazon, and Google. Number two, when you invest in VOO, you own a small piece of all 500 companies. And number three, it's diversified, low cost, and boring. But boring is actually good for long-term wealth. Instead of trying to pick winners, you invest in America's largest companies as a group, and historically, the S&P 500 returns around 7 to 10% annually after inflation, depending on the time frame. For my first 60 days or 40 market open days, I invested $5 a day, or just $100 a month. Most people think you need thousands of dollars to start, but thanks to fractional shares, you do not. Small, consistent steps beat big, inconsistent ones. And this consistency isn't accidental. It's built into the strategy. Instead of trying to guess the right time to invest, I committed a fixed dollar amount on a repeated schedule every market day. This is the core idea behind dollar cost averaging, and it works especially well when combined with fractional shares. Because you're investing dollars, not whole shares, every dollar goes to work immediately. It's the same whether VOO is trading at $200 or $600. When prices are higher, that $5 buys a smaller fraction. When prices are lower, it buys more. Over time, this naturally lowers your average cost without relying on market timing. And that's the real advantage. You're not reacting to headlines, you're not guessing tops or bottoms, and you're simply staying invested through every market condition. This approach does these three critical things. Number one, it removes emotion from the decision-making process. Number two, it smooths out volatility over time. And three, it builds a disciplined, repeatable system, which is how long-term wealth is actually built. Most investors don't fail because they picked the wrong investment. They fail because emotions break consistency. And dollar cost averaging paired with fractional shares solves that. And lucky for you, this is really easy to implement. Nearly every major brokerage, Fidelity, Vanguard, Schwab, Robinhood, SoFi, lets you automate fractional investments. All you do is set it once, let the system run, and focus your energy on long-term growth instead of trying to time the market. So what can investing $5 a day realistically grow into? Let's take a look at the exact numbers. Okay, so we are here in the investment calculator now, and let's see how much we can make if we invest $5 a day for the long term. So let's set the starting amount to $0. So let's say you want to invest for 30 years for retirement, and let's say the return rate is around 8% on average, which is the average return of the S&P 500 adjusted for inflation. The additional contribution per month is going to be $100, which is $5 every market day. We're going to contribute at the end of each month. Let's just say that. I'm going to click calculate. You can see that the end balance after 30 years of investing $5 every market day is over $140,000. Now you can see here that the starting amount is just $0. The total contributions that you put in will just be $36,000. But the total interest that you earn is over $100,000. Insane. If you scroll down and look at the accumulation schedule, you can see that year one, you deposit $1,200, which is $100 a month for 12 months. The interest earned is $43, and your ending balance after 1 year is $1,243. Now you go into year two, you can see that you deposit the same amount, but the interest is actually higher, and your ending balance is around 2.5K. Moving on to 3, 4, 5, and so on and so forth, you can see that your interest compounds like a snowball rolling down a hill every single month, every year. And you can see at the end of 30 years, you'll be investing the same amount, but your interest is $10,000 and your total ending balance is $140,000. That's actually insane, and that is the power of compound interest and long-term investing. So let me show you my exact portfolio of how much I made investing $5 a day for the past 60 days. But before I show you the numbers, there's something important that you really need to understand. Throughout the 60 days, this experiment actually went through both good days and bad days. There were days that the market was up, and days it was clearly down. This is where most people make the wrong move. If I had stopped investing on the bad days, the results you're about to see would be completely different. And that's not just an opinion, that's actual math. Most people don't fail at investing because they start late. They fail because they quit right before consistency starts to actually matter. And what you're about to see isn't impressive because the number is huge at all. It's impressive because nothing special was done. I invested the same amount into the same asset, on the same schedule. So in a market that wasn't perfectly smooth, what actually happened after 60 days of investing just $5 a day? Let's jump right in and take a look. So looking into my app, you can see that over the last 60 days, I invested just over $200 into VOO, and I currently have 0.35999 shares. My average cost is currently $624, and the total dividends I've currently received is 50 cents. I made no changes to the schedule, I made no adjustments based on market movement, and I didn't skip any days. Now this isn't about if my portfolio is massively up or down. What matters is how my strategy behaved. As you can see so far, this account reflects consistently with investing during market up and down days. Some entries were purchased at higher prices, while others were purchased at lower prices. But the average price continues to smooth itself out, exactly like it's designed. This is what disciplined investing looks like in real time. This portfolio doesn't rely on timing, it doesn't rely on predictions, it relies on a process. Even at this early stage, you can already see the foundation being built, not through luck, but through consistency. The dollar amount here is not the takeaway. The takeaway here is that the system is working exactly as intended. Same asset, same contribution every single market day. And that is exactly how long-term portfolios are built, one controlled decision at a time. Like I mentioned before, if you want to take the first step in your investing journey and you want to use the same brokerage that I use, which is SoFi, use the link down below to sign up and you will get $25 of free stock. It's a great way to help boost your portfolio before you even begin. The moral of the story here is that if you're feeling overwhelmed, start small. Just $5 a day, $20 a week, or whatever fits your budget. The key is consistency, automation, and long-term investments into VOO or other broad ETFs or index funds. That is it for today's video, guys. Thank you so much for watching. If you found this video helpful, hit that like button, drop a comment telling me how you personally invest every month and what you buy, and make sure you subscribe for more videos just like this. This is going to be one of my favorite series, so I'll update you guys after 90 days, 120 days, 150 days, and for the years to come. Always remember that your life is a masterpiece, so let's unlock your full financial potential together. Thank you so much for watching again, and I will catch you in the next video. Take care.